What's up, everybody? It's Logan. Welcome back to the Contrarian. I hope you are all doing well. It's a slightly different setting that I'm recording with today. I'm actually recording while I'm out on kind of a walk/hike right now after work, and I thought, what better way to record a video at the same time as doing something I really enjoy. But today I'll really be talking about the gold and silver market. Just some helpful tips that I wish I had known before getting into it. And also being in it for a few years now, just some helpful things I've learned that can hopefully help all of you who might be thinking of getting in this for the first time. I know there's a lot of ads out there right now, marketing campaigns on other YouTube channels or social media in general. It's hard to go very far without hearing about gold, silver, getting into gold and silver, etc. And even though I myself am very optimistic on this market, the precious metals, commodities generally, actually, there are some good things just to be aware of for this market, especially right now, as I think in the coming year or several years, as this market gets a lot more crowded, a lot more froth enters it, just some helpful things to be aware of so that none of you guys fall into any of the potential scams out there that might be in existence right now or that come up when the market really gets going. So first off, there's a lot of things to be aware of, helpful tips for buying either physical silver or ETFs or miners. So it's kind of important to know which sector you want to get into, because there's a lot of ways you can play the gold and silver market. Mainly those three that I just mentioned: physical silver, physical gold. That's usually what you hear about on all of these marketing campaigns. There's also ETFs that track both of these physical metals, so it's a much more liquid market right there. And then there's miners, and that's a much more emotionally driven market, but it's much more leveraged. So on the upside, you'll experience a lot more upside, and then also on the downside, and when sentiment's very low, you'll experience a lot more downside there as well with the miners. So just some helpful tips. First off, it's a very illiquid market. So what I mean by that is you buy some physical silver and gold. It should be with the mindset of, I have nothing else to do with this money. It would otherwise just go into savings or bonds or something else like that. So this should not be money or cash that you need right away, because it's a very illiquid market. What I mean by that is, to buy or sell physical gold, silver, you need to go to a dealer, whether in person or online, and these dealers are going to take a pretty hefty percentage off the top as commission. Unlike Robinhood, there isn't a commission-free way to trade physical gold and silver. So there's more of a cost getting in and out with the physical market, at least. So just be aware of that it should be a very long-term investment. In fact, I wouldn't view it as a typical investment. I would view it as something that I'm going to park my money in, this extra money that I have that would otherwise be savings or bonds or something like that. I'm going to park it in gold, and it'll be there for decades. Plan on decades, at least, for the physical metal, that is. Now, if you want a more liquid market, you still want exposure to precious metals, I'd consider the ETFs or the miners for several reasons. First off, the miners are much more liquid. You can just trade their stocks or ETFs. Also, there's you're not having to store the physical metal. That's a big thing too. With storing the physical metal, you are, taking risk that fire or theft happens, something very unlikely, but, there's that added risk there. You might need to consider some storage as well if you're buying a lot of physical gold and silver. Also, have an exit plan when you get into physical gold and silver. So, the last few years probably would have been a good time to get in. Probably still is right now as well. I guess that's up to every person to decide, but I would consider it still a good time to get into the physical metal as well. But a lot of people in previous cycles have bought in close to or at the tops, and that's not the time to be getting into physical gold and silver. That's the time to actually be starting to sell off your physical holdings, or if that's your exit plan. But you need to have an exit plan. That's a really important key of this market. Another thing, only buy treasury issued bullion, whether that's bars or coins. For me, that mainly means my silver and gold is American Eagles and American Buffaloes. I really don't go out of those two options. And even though there's more premium that you're paying for these two options of American Eagles and Buffaloes, um, any of the collectibles or more numismatic coins, even though there's less of a premium there, it's a lot harder to get out of them. It's a lot harder to exit these, more rare coins that a lot less people want. So I would stay out of those entirely. If you're into physical silver and gold for the kind of insurance purposes, of which there are many, like if a real economic whirlwind actually happens, like the dollar being abandoned as a world reserve currency, which I think it eventually will be, but it's kind of up for everybody to decide what their assessment is there. If a real economic whirlwind hit like that, you would want much smaller denominations of physical gold and silver than are typically offered. So you want definitely small amounts of silver, small amounts of gold too. But you also want commonly issued physical gold and silver, because a lot of the times, whether you're looking back at past historical events when this has happened, in other currencies, it's oftentimes the case where the silver and gold that's in all these collectibles and numismatics isn't worth as much or near as much as the treasury issued coins and bullion. So I would stick with those entirely just for myself, but kind of encourage you all to do the same with that. As I mentioned, know your options: physical gold versus ETFs versus miners. Physical gold is the best for that kind of rare economic whirlwind I mentioned. So it's the best for that kind of insurance because you physically have it. Whereas the ETFs, there's a lot of speculation out there whether they actually have the physical metals that they say they do. So, if you're in the market just to trade it, I would stick with the ETFs. If you're in it for the insurance purposes, I'd go with the physical metal. And then there's miners. Again, if you want to trade it, leverage yourself there, either long or short, I would go with the miners because they really go up dramatically. That's where you hear about the 10 and 20x stocks in the bull markets that these precious metals have had in the past. But they also go down, 90, 95% in the bear market. So, they definitely leverage the precious metals market. But I would say, it's a very emotional market. Something I wish I would have known before getting into it generally is it's a very emotionally driven market, especially with the miners. I mean, gold has basically treaded water the last 3 years. Silver's kind of treaded water, depending on when you look at it. But the miners are down any, 10, 30, 40% in the last 3 years, even though the metals have done nothing. Basically, they've gone up and down within a range. But it's in a very emotionally driven market. So I would be aware of that too. At the top, there's going to be a lot of people, telling you, oh, you need to buy physical gold and silver. The economy is going bust, dollars going down the toilet, whatever the narrative is at the top. That's when everybody is going to be wanting to get into silver. So in terms for myself, my exit strategy is when everybody in my family, friends are starting to talk about physical gold and silver, that's a good indication that it's time for me to start thinking about getting out of it, because like any bubble, like anything that turns into a bubble, I do think that gold and silver eventually will kind of become the ultimate bubble, kind of looking at something like Exeter's pyramid, where you have, the most abundant derivatives, at the bottom of the pyramid, and then the least abundant precious metals at the top of the pyramid. And that's also what all the central banks happen to have, is precious metals. But, that's a separate video entirely, looking at the end game. You really do want physical gold and silver for that, because like I mentioned, ETFs, at the end of the day, they're great for trading and things like that, but not as good for this kind of, 1% in a lifetime type of chance of economic whirlwind unrest actually happening. So all that being said, let me know what you think about all of this in the comment section below. I'd like to hear all of your thoughts about physical gold and silver, why I, as a very optimistic investor in this market, am still just trying to put some caution out there for, all the marketing campaigns, ads that you probably see on social media for, getting into this market. There are some helpful things to be aware of. that I hope I mentioned. If you have any other thoughts about this, feel free to put them in the comment section below, and I hope to see all of you again at some point. I hope you enjoyed the views as well, because it's a very scenic hike that I'm on right now. But all that being said, let me know what you think about all of this in the comment section below. I hope to see all of you again at some point.